Good morning, everybody. Hopefully, you all had a much better night than I did. Spent a lot of the night up cleaning up messes from people getting sick. It was fun. Let's go ahead and move this mic a little closer so you guys can hear me. Hopefully, you can see my screen just fine. And I'll just dig right into prep. I'm going to try and get through it quickly so we can get back into the room and start talking strategy for the day. First things first, we have the economic calendar for this week. Let's take a look at that. Not much today, just the Empire State Manufacturing Index. Tuesday we have retail sales. We also have some Fed, presidents speaking on Tuesday. And then we have initial jobless claims. Nothing really on Friday, except Friday is option expiration, OPEX. Hopefully everybody understands that there are monthly, quarterly expiration contracts for options, and every month there is option expiration on a certain Friday. So we get that this Friday. That can lead to all kinds of activity, really. We can have a choppy week where we just kind of stay in a range. We also have seen OPEX weeks where we move a lot. So we'll have to see what we get. But going into the week, let's look at what we got. We are in this 4-hour squeeze. For the newer folks, kind of the higher the time frame squeeze, the higher the probability of a reversal at it. We've seen some very strong reversals on 4-hour squeezes. For instance, all these other are lower time frame. The 4-hour actually started to arrive here, and we hit it for a big reversal during the cash session, and one more tag of it has started this whole uptrend back up near the top of it. So, coming into today, we have a 30-minute, we have a 1-hour, and we have that 4-hour to keep in mind. As you can see, we are we kind of had a trend line from the highs overnight that we're starting to pop through a little bit and test the squeeze top. And we also have these trend lines from the lows after this move higher. If you start to draw a trend line that's too sharp from just like this low to that low, we started going through that on Friday. And, that can be very helpful to know when it's time to actually short something, right? As we did on Friday. But now we have a more gradual trend going on that we keep bouncing at multiple times. And as you can see, I've drawn 2 trend lines to kind of represent the low wicks and the low bodies. I like to do that sometimes to create kind of a channel of support that should keep us moving, whereas we can give out the first one just to tag the second, trap people short, and then get right back above. We do have our squeeze tops and bottoms right at around some key levels. The first Keltner down, which is above us right now, and the daily 8 are right in line with this squeeze top, the 1-hour. And also with the 4-hour, we have 40.56, which was the low of a year after we gave out the 41.01. So very key levels. Let's see, we've got also to the downside, this zone is very key. We talked about this zone last week. We fell to it and bounced, to it and bounced, to it and bounced, but then once we gave out, resistance, resistance, resistance. Now we're back above and already bounced at it. So, clear target to the downside if we start to slip outside of this squeeze bottom would be hitting this zone for a test, and should that give out to this Keltner for a test. But if we can hold this uptrend from the lows, and we can even reach outside it to tag the squeeze bottom and then get right back above. If we can hold all that, we can continue a trek higher to the daily 8, this 40.56, and then above that, we have the daily 15 at our 41.01, and the daily 21 is pulling up on our 41.36, 41.40 little zone. So isn't that interesting that now the moving averages are starting to get right near our key levels so that we can go test all those and tap them at the same time. We are close to the mean, so wouldn't be surprised for us to have a strong day, potentially today, to get up to the mean. We have also seen a number of Mondays where they like to bring it up near the highs and make it look strong, pull it back and make it look weak, just to load up longs for this week, since they were playing last week's, mainly. So I'm going to let this squeeze be my gauge, this 39.80 big key level where we bounced on Friday. That's going to be a good gauge to the downside if we get below 39.80 and keep rejecting it. Into the upside, we've got 40.40 and 40.30, which were kind of the tops on Friday, to go test as well. So, as we'll look every day, when we get near the squeeze tops, we'll be gauging puts for a rejection and to come back down. When we're near squeeze bottoms or holding something like these trend lines, we'll be watching calls to see what's at beast and take a shot on all those. NQ. Basically the same premise. Up above a key level that we bounced at on Friday. Definitely want to see us stay above that for continued longs this week. And we have our squeeze in place as well. So just like on ES, I can see us tapping this squeeze bottom, maybe even reaching out to this level, and then getting back above for continued upside. But if this level gives out, then we will most likely revisit some of the lows of last week. Also, one thing to note on both ES and NQ, I kind of did this in our Q&A review over the weekend, and I definitely recommend everyone go to watch that. But what I covered was sometimes it's worth drawing a zone on Monday's high to low. And then if you project that forward, and we'll just give it back a little bit, you can see that zone contained price action into Wednesday, when we got, what was it, CPI or whatever. Then we slip out of that zone to find a bottom and fight back into that zone. And now we are still in that zone. If we go back a little in time, where are we fighting to get up to? It's kind of the next zone above where we had more price action and consolidation on NQ and ES. If we go take a look at ES again, because I kind of did mean to cover this point before I switched off ES. And if we kind of do the same thing, this is the zone that we are currently in, going into an OPEX week. We can get a good push and get a reversion to the mean and get up and test these levels. We can slip this trend line and go back to revisit lows. And we can also just chop in this zone into OpX. If you went back to the previous Monday and drew the same box, same kind of zone, it kind of contained price action until that FOMC, then it fell right back in, ultimately holding the lows and closing in that zone. So if we fight out of this zone, you have another zone right above that contained all of price action last week. So, just thought I'd cover that point on all of these names. So let's see if this 1 hour and 30-minute squeeze contains price action today. You can draw your trend lines on NQ just like I did on ES. We're kind of coming into a wedge, so let's see if we break to the upside to go start hitting daily moving averages and getting above them and taking off from them, or if we just reject squeeze tops and the daily 8 that we're at again to show us signs to go to the downside. Ready? Could be a good early gauge if it can reclaim the daily 8 and push off of it. And to the downside, same thing as everything else, watch the high and low wicks. This might go back to test 1750 if we do fire to the downside. YM. YM has a number of squeezes in place. Is this the 4 hour? Yeah. And the 4 hour is starting to get kind of tight. So again, OPEX week, we have not seen chop in quite some time. Sometimes when you use like VIX as a gauge, we talk about sometimes they gotta take it higher to go lower. VIX starts getting up near extremes, it can start to lead to panic. So we get these dramatic cover pops and VIX goes down. Another way to make VIX go down is to send the market sideways for a week or so, where we stay in a range, but we don't really go anywhere, right? We have good moves here and there. So, just a precursor that it's been a while since we've had chop. It is an OPEX week. Always be prepared for that scenario and to play these squeeze tops to bottoms until something breaks in a direction, right? Use your trend lines, etc., etc. Apple. Apple kind of pinned between 155, big key level. The daily moving average is coming down to that. The daily 21, almost there. The daily 15 is already there. And 155 was a key level that over 155, Apple's pretty bullish. Under it, it starts to get weaker. And we slipped from 155 to a previous all-time high. So 155 was a very important line in the sand. Once we got over it last year, Apple led for tech when it was actually kind of weak, like the first half of the year. So let's see. After tagging that previous all-time high, if the momentum can carry Apple back up over 150 and to the daily mean at around 155, where we might see, our next rejection before hitting lower. Or let's see if Apple just gets stuck between 150 and 140. That previous all-time high, right? Could just stay in this range in that 4-hour squeeze. Well, it doesn't have a 4-hour, but it probably will by the end of the day. AMD, and something to keep in mind on Apple is if we push up and open in these squeeze tops, which would mean a little bit of a gap up. Yeah, we're already dealing with a tiny gap up. So if we open these squeeze tops, be ready for them to, should do a couple of pops and then bring it right back to find a base before actually going up and opening these squeezes to the upside. AMD. Very strong Friday. Definitely led the way on chips, I feel like. AMD was a little stronger than NVIDIA, maybe. But our thesis on Friday was pretty spot on. We got up over that 87, 89 level. So at open, if we dip, it could be to that level and that pre-market candle. It held, it reversed right back up to our next key levels and zones above. So keep an eye on those key levels and zones, right? We got 93.14 below, 96.07 above. If we can get through 96.07 and Friday's high, 97.98. And we have our daily squeeze and our daily 50 up above. Oh, AMD got over the daily mean. Ooh, relative strength. Look at that. While other tech names are still below their daily 21, AMD got 2 and through it and held it and is trying to press higher. So it does have room to move to the upside to go test 100, the daily 50, and what looks like a daily squeeze up above. That it might, we might see a reversal around there. So could see a nice pop in AMD, a continuation of all this strength. Amazon was it pretty strong on Thursday. It was basically actually one of the stronger names in tech and kind of leading the market on the upside on Thursday. And you can see on the pullback it had, it did not go back to retest lows like the market, set a higher low, had a strong Friday, getting to the top of this, what used to be a 4-hour squeeze, but it's opening up and firing. So good strength in Amazon, and we have that stock split coming up. So could be a leader for tech to get back, to get, NQ and ES back up to the daily mean. Cat. Whole bunch of squeezes in place, so use those as your gauge. When we get near 200, you go long. When we get near 207, 208, lock up profit and be ready for a reversal. Overall, not a huge interest in it, but going to watch it as a gauge for YM. And if it can get going, above 210, we can maybe fire some of these squeezes to the upside to go back and get the daily mean and the daily 50. Facebook. It was nice and strong and wanted to get back to 200. Now we're knocking on that door, big psych level, and the daily mean is almost there. Let's see, Facebook POC is pretty much where we're going to be opening. And we'll be at the daily mean with some key liquidity right around us and up above, so would not be surprised for Facebook to bounce around this liquidity before making the move higher or back down. But it is, one of the big names in tech that is close to the daily mean, could easily get there today. So could be a good gauge to keep an eye on for interaction for the full mean reversion. What do we do from there? Google. Kind of feel like Google played kind of a little bit of catch up. Wasn't the strongest in tech, but did ultimately make the move from squeeze bottom to squeeze top. I feel like it doesn't have as many catalysts for it right now going on as Amazon with the split and some other names in tech. So Google might need a little time to return to leading like it used to do. But overall, we're going to watch these squeeze top and bottom. And Google could, I believe, it could get to the daily 21 today. So, something to keep an eye on. Since it's OPEX week, we could fight up to the top of these squeezes, slap the daily 21, and come back and settle in the zones that we were in the previous weeks. GS, nearing the top of a 4 hour, and it's saying this 2 hour is starting to fire to the upside. And GS could technically get back to the daily mean today, in the middle of the squeeze top. So, on a number of names, big names, we could be hitting the daily 21 today. Give us a good indication for are we going to settle or reject and start the journey down. Watch that ascending wedge and the support from the lows on everything. JPM, not a huge interest. It's going to be the same thesis as GS. Microsoft, looking a little weaker compared to some other names in tech. To get back to the daily mean on Microsoft, it looks more like about a 2-day journey. 10-point ATR, 71. A little over 1 ATR, so that's why I say it looks more like a 2-day journey, whilst others could get there today. But very tight squeeze on Microsoft over here. So we'll have a nice tight range today to be able to gauge if buyers keep stepping at the low, if it gets stuffed, if we set higher lows or lower highs, if we wedge and break out. But nice range right here centered around 260. That will let us know if it's going to actually start to push or, get dragged up with the rest of tech. Netflix. After just living under third Keltner, it got right back to and through the second Keltner. So I could say we're definitely seeing strong rotation into Netflix, just like I talked about relative strength in tech. We saw Google get back down to the lows. We did not see AMD get back down to the lows. So we did not see Netflix get back down to the lows, and it's been in this upward channel. If this channel breaks to the downside, it could be a quick acceleration just as fast as it went up to retest, like, this push into the end of day. During the cash session, if we start to break that, it could accelerate just as fast back down to that daily 8. But overall, relative strength looking pretty good. Let's see if it can hold these key levels, the daily 15. I'd say if it starts to dip below this 185.5, we could be seeing all of tech rolling over. But let's see if Netflix wants to keep leading on a journey to get back to the mean. Still pretty far away. And POC is below on Netflix right now, so something to keep an eye on. Let's see. On to the next. NVIDIA. NVIDIA. No real squeezes intact at the moment. We did just have a 30-minute, but it is opening. So it's not technically still intact, but those levels exist. So when we get near them, keep an eye out. NVIDIA with the 13-point ATR can pretty much get back to the mean today. And if it is going to be chips that lead us, like AMD, seeing a lot of rotation, and NVIDIA following, since AMD, was a little more of a leader, you might see like NVIDIA catch up if chips continue to lead. So could be a decent trade for NVIDIA to get back to the daily mean. Qs back over 300. That's going to be a pretty particular line in the sand, especially with 300 right in the middle of the squeeze today. You should be watching the 300 call and the 300 put. If we are running into the top of the squeeze and buyers don't step in to keep pushing us through it and through this pre-market high, around 304, those 300s might be hitting beast. We play them back down to and through to hit squeeze bottom. And this low that we bounced at about 297.70, you might find those calls hitting beast. So definitely keep an eye on the 300s today. Use this squeeze and this pre-market high and low as your gauge. If I zoom in a little bit, you can see the pre-market low, 298.50, and the high, about 304.50. So Roku, again, relative strength, was not down below third Keltner like Netflix. It is already back at the daily mean. And we do have POC just slightly, pretty much where we're going to be opening. So let's see if it can push off of the daily 21 and POC at the top of the squeeze to get up through 100. And the first Keltner up, where the daily 50 is also sitting to make a nice little zone. And target right around 110. So Roku closed at 97 and still has a 10-point ATR, so could actually make it there today if it wanted to fire the squeeze to the upside. But keep an eye on that pretty tight squeeze, about a $2 range, so we'll get a good indication. Shop, finally breaking through downtrend and riding up with the market. We have the 21 up above. We have POC way down below at 340, so keep an eye on that trend line from the lows. If it gives out, we could get a quick pullback to that second Keltner down on Shop. SPX. left a little gap behind here, so if we do get weak and start to slip on ES to retest those zones, keep an eye on this gap on SPX, because that could be the target where they want to fill it to turn around. We are going to be dealing with a slight gap down, so we'll see. Could see a pop at open, retest highs, daily 8, Keltner, and squeeze top just to turn around and hold and set a maybe higher low. On SPX, SPY. And just like the Qs, you definitely want to watch the 400 today as we near squeeze tops, if we get back down to squeeze bottoms. That 400, 401 going to be key, because we'll be passing it and it will be in the money if we oscillate between those extremes. Should we get going through the top of these squeezes, we have the daily 21 up at 415. We got POC at 401. 401.46. Basically going to be opening at it. So let's see if that can shoot us off to the upside, or if we need to go back and retest these lows and squeeze bottom. Square. After dumping to 65, we're right back up to 85. You know, you can draw a zone here, maybe between highs and lows. Once it starts to break out of that to the upside, it will likely get a reversion to the mean and to retest 100. Oh, Square is still on my screen. Still, I'm not gonna take her off yet. Still like what she does, so. Tesla. Tesla. Stuck between 750, 800. We've got some tight squeezes stacking up in that range. Draw your trend line from the lows. We could be giving that up if we get to these squeeze bottoms as well. If we can push against the squeeze tops, open them up, and get above 800, it could be a good-looking recovery week for Tesla to try to get back to the mean, but it has a ways to go. About 100 points to get back to the mean, so definitely a 2-day journey. And we've got POC at 269, basically where we're going to open. So for upside and reversion of the mean, basically need to hold POC, need to keep bouncing at squeeze bottoms, start to push through the top and get above 800, and a bid to get back to the daily mean. And good old VIX. In that drive on Friday, VIX kind of bounced at this 29.20, then settled and did it again, and then rejected it late day. We are now settling again right at that 28.80, 29.20. We have a squeeze bottom. Looks like a 30-minute. There's also a 4-hour and a daily, which I'm assuming are these. Yeah, there's your 4-hour. And the daily is pretty wide, so not anything to worry about at the moment. But let's see if VIX tries to defend this zone. You know, it rejected it before, tore through it. Now we're at it and settling. We could see a bounce here, get back above the 30s, 32s, get back up to this range on VIX, which would send us back down to last week's range on ES and everything. So hopefully everyone found this prep helpful. We'll catch you in the room today. Good luck, everybody. And you know, let's have fun. It's OPEX week, so don't size crazy. Be prepared for chop. And we'll see you in the chat.